If you're planning for the long run, you want financial stability. Of course, you also want the opportunity to see your money grow. Getting both together can be difficult, but there is a strategy that can help you get there. The GS Momentum Builder Multi-Asset Class Index is based on a portfolio of indices that rebalance monthly and can even rebalance itself daily to keep volatility low. The goal is an index designed to reflect steady and consistent growth over the long run. The Momentum Builder Multi-Asset Class Index was developed by Goldman Sachs and started on July 25, 2014. Different variations of the index have been used for years by large investors, but they all have a few things in common. Here's the core of how they work. The goal is to build a diversified portfolio with a lower level of risk that delivers a higher level of return based on recent market data. It starts with two things. The first is a maximum volatility level. Volatility is a measure of risk. It tells you how much a stock price or index varies over the course of a year. For this index, the maximum volatility is set at 4.5% measured monthly. The second is a collection of assets to build the portfolio from. They have to be highly diversified, so the index draws on a set of 8 futures indices spanning 5 asset classes, plus a money market position. The 8 indices, some of which are sponsored by Goldman Sachs, all track commonly used benchmarks. So those are the building blocks. Here's how the strategy works. It's based on a set of predetermined rules, which are typically carried out by computer. Each month, it evaluates thousands of asset combinations. It assigns weightings to each asset, subject to constraints on maximum weight. Using market data from 3 different look-back periods, it maps each combination's volatility against its returns, then identifies the highest performing combinations using preset rules. The remaining portfolios get eliminated, along with anything that exceeds the 4.5% maximum monthly volatility. It then chooses the top performing combination from each of the 3 look-back periods: 3 months, 6 months, and 9 months. Those portfolios are averaged together, and that becomes the new portfolio for the month. Note that the new portfolio may have fewer indices, or more indices, than the month before. But the process doesn't end there. Every day that month, Momentum Builder does a different volatility check. It looks at the actual movement that the monthly rebalance portfolio has gone through over the past 3 months. If that volatility is above 5%, then the portfolio gets adjusted again. This time, funds get moved out of the 5 asset classes on a pro rata basis and into the money market position, which brings the volatility back into line for that day. And if the markets calm down again, the funds can go back into the asset classes. But you should know that if volatility is high across multiple asset classes, there may be days where the portfolio doesn't have any indices and all of its exposure gets allocated to the money market position. Keep in mind, this video only deals with the Momentum Builder Index itself, and that index is only one piece of a larger financial product. Be sure to read and understand all the information about any product you're considering and consult your financial professional, especially when it comes to risks. Like all financial strategies, Momentum Builder carries some risks and considerations you should know about. First, there are some rules about how the index is calculated. It's an excess return index, just like most cross-asset indices. That means the dividends on the portfolio are reinvested and the cost of the funds, at the overnight federal funds rate, is deducted from it. And there's an index maintenance fee of 50 basis points per year, which is also deducted. Note that the providers of the index, or the providers of the 8 underlying indices, could change these rules at any time, and that could affect the Momentum Builder results. Second, the strategy relies on recent market data when it creates the portfolio for the coming month. But market behavior changes, so it may not always produce the optimal combination of assets. Third, the strategy uses 4.5% volatility as a target, but the actual volatility of a particular portfolio may be lower, and portfolios with lower volatility could produce lower returns. Finally, as we've mentioned, the strategy is carried out by computer. While the methodology was designed by Goldman Sachs, it's not actively managed by the firm. What Momentum Builder delivers is a self-adjusted, highly diversified index designed to reduce large swings up or down in value with the potential to deliver steady and consistent growth over the long run. If that kind of performance sounds good to you, then consider the GS Momentum Builder Multi-Asset Class Index. It lets you take advantage of a systematic trading strategy that large investors have been using for years. A strategy designed to deliver consistent growth in a wide range of market conditions.